Are you confused with the steel sector product portfolio in identifying the right company for investment? Do you want to know hot stocks which are fundamentally good and affordable to invest in creating huge wealth? Yes, my subscriber, I hear you, and this video is for you. I am Dr. Krish. Welcome to our channel KrisDom Investor. Here you get timely, quality, and unbiased opinion on the stocks and investment opportunities. This is the process flow of the steel industry where it involves 3 steps. Number 1, iron making process. Number 2, steel making process, and continuous casting process. All the steel companies either fall in one or other category, and very few have integrated plants with forward and backward integration to make steel from raw materials to supply all kinds of steel products to their customers. When we look at the iron making process, that is step number 1, the raw material used is coal, iron ore, and limestone. Sinter plants agglomerate iron ore dust with limestone at high temperature. The intermediate product is sponge iron if there is no limestone used. The output from the sinter process is fed to a blast furnace. Pig iron is the intermediate product at this stage. There are various steel companies who focus up to this stage of production only. However, in the integrated plants, this can be fed to the next step, that is the steel making process, also known as primary steel making, which involves converting liquid iron from a blast furnace via basic oxygen steel making or direct reduced iron in an electric arc furnace. This primary steel making process, which also used for converting the steel scrap to a regular steel. The casting process, also known as a part of secondary steel making, involves refining the crude steel before casting, and the various operations are normally carried out in ladles. In secondary metallurgy, allowing agents are added, dissolved gases in the steel are lowered, and inclusions are removed or altered chemically to ensure that high quality steel is produced after casting. Hot rolling is a mill process that involves rolling the steel at a high temperature, which is above the steel's recrystallization temperature. When steel is above the recrystallization temperature, it can be shaped and formed easily, and the steel can be made in much larger sizes. Hot rolled steel is typically cheaper than cold rolled steel due to the fact that it is often manufactured without any delays in the process, and therefore the reheating of the steel is not required. Hot rolled products like hot rolled steel bars are used in the welding and construction trades to make railroad tracks and I-beams, etc. Hot rolled steel is used in situations where precise shapes and tolerances are not required. Some of the listed companies buy crude steel or pig iron and carry out this entire process at their premises to sell the finished goods to their customers. Cold rolled steel is essentially hot rolled steel that requires further processing. The steel is processed in cold reduction mills where the material is cooled at room temperature, followed by annealing and tempers rolling. This process will produce steel with closer dimensional tolerances and a wider range of surface finishes. The term cold rolled is mistakenly used on all products when actually the product name refers to the rolling of flat rolled sheet and coil products. Examples of cold rolled steel products include bars, strips, rods, and sheets used in consumer appliances, auto manufacturing, precision defense, etc. Hence, when you see the steel segment cold rolled, it is not necessary that all companies are into the cold rolled segment. There are 2 steel PSU companies in India and around 15 plus major private players spanning around the different segments. The steel sector is the top priority for the government. Being a core sector, it also tracks the economic growth in the long term, as steel demand is derived from the other sectors like automobiles, consumer durables, and infrastructure. India is the world's second largest steel producer. Finished steel production at 101 million tons. Per capita consumption of steel grew at CAGR 4.43% to reach 74.1 kg. Government allowed 100% FDA in this sector. National Steel Policy 2017 set targets of 160 kg per capita consumption by 2030. If we look at the recent developments, there is a strong recovery in the steel prices. The graph shows the prices in India, China, and Europe. Now if we move ahead and see the price of the raw material like coking coal, its prices have dropped drastically. Combining these two developments, we can conclude that it is leading to enhanced steel spreads. In conclusion, steel spreads have improved with the upward trajectory of steel prices and weaker coking coal prices. Hence, most of the companies' operating margins should improve, and the same thing which we have noticed in the Q3 earnings report. I expect that at least for the next 2 quarters we will see the same trend. Steel sector performance is underwhelming over the last decade. If you ask me, is it the right time to buy steel stocks? Yes. As per my observation based on data analysis, price to exit is when a stock price crossed price to book value at 2.4 in this sector. These figures are arrived based on the past cyclicals which it exhibited. You may have some questions, isn't it? Like, which steel stocks were the top performers over the last 5 years? The answer is Tata Steel, JSW Steel and Kalyani Steel. In the last 5 years, they have exhibited strong sales and profit growth, except during the corona quarters. So then what kind of dividend yields do steel stocks offer? For this question, there is no consistent trend of dividends across this industry, is the answer. Among the top companies, Tata Steel has the highest dividend yield of 14.7% and JSW Steel at 1.1%. Alright, then do you want to know which are the steel stocks with the highest return on capital, that is ROCE? Alright, among the top companies, National Fitting with the highest at 32% and Jindal Saw lowest at 11.6%. I hope you got an overview of the steel sector by now, especially about the product portfolio and the top stocks. Now let us move to the hot stocks of this sector for 2023. Here, these stocks were shortlisted based on my 5-dimensional KrisDom criteria. This criterion will be revealed to you sooner or later. Let's focus on hot stock number 1. The price movement, sales and margins trends are shown here. Here the quarterly sales are consistent over a decade at an average of around 400 crores. However, the price has drastic fluctuations. Since last year we could see a drastic increase in sales and not much appreciation in the price. This company has a market cap of rupees 1270 crores and the current market price is at rupees 26. Return over 1 year is at 76.8%. Company's debt got restructured. It has an excellent Q3 numbers. Now this company story is a turnaround story. The company name is JSW Ispat Special Products Limited. In August 2018, Monnet Ispat and Energy Limited has been acquired jointly by a consortium of Ion Investments Private Limited and JSW Steel Limited. The name of the company has been changed to JSW Ispat Special Products Limited with effect from 23rd September 2020. It is in the elite group of primary steel producers with a world-class integrated steel plant at Raigarh that has a production capacity of 1.5 million ton per annum to produce HR plates, rebars, structure profiles to cater to the rapidly growing infrastructure and construction industry. JSW Ispat is among the top 10 integrated steel plants, having 2 steel plants at Raipur and Raigarh respectively. Company products targeted towards specialized applications, especially the alloy steel, having higher realizations and margins. The transformational journey of this company is shown here. JSW has turned around this company within 2 years of its takeover, achieved the highest EBITDA in Q3 of this financial year post takeover. It just started ramping up special steel operations as well. Key highlights are that it is having a credit rating of BBB+ and leveraging JSW's procurement, sale, distribution, brand and technical expertise. Q3 numbers clearly show a turnaround. Top line over 1000 crores and bottom line at 30 crores. Intermediary steel products such as pig iron and sponge iron occupy a major part of their sales. Negative to a positive bottom line marked here for your reference. Receivable days and working capital cycle shown here. One can notice that receivable days are getting lower and it's a good sign. EPA over 10 years is positive, which means it is a worthy company even it becomes a penny stock. Rest is self-explanatory. Please pause and examine. 35 different metrics such as sales, operating cash flows, profit after tax, earnings per share, etc. of this company are plotted for your quick reference to understand its turnaround story. 30 unique metrics as shown were evaluated and the score which the company attains is at 19 after considering the latest Q3 numbers. It indicates it passed 19 metrics on a positive note. Let's focus on hot stock number 2. The price movement, sales and margins trends are shown here. Here, the quarterly sales are consistent over a decade at an average of around 300 crores. However, the price has drastic fluctuations and finally bottomed out for the last 8 years. For a couple of years, we could see the company posting excellent top line. Sales to price divergence clearly seen here. This company has a market cap of just 276 crores. Current market price is at rupees 24. Return over 1 year is at 9.1%. Company's debt got restructured to sustainable levels, having a potential to generate high EPS. Debtor days improved from 47.8 to 35.6 days. The company name is J Balaji Industries. J Balaji Industries Limited engages in the manufacture and sale of sponge iron, DRI, pig iron, ferroalloys, alloy carbon and mild steel billets, alloy carbon and mild steel rounds, TMT bars and ductile iron pipe. Q3 numbers clearly show a turnaround. Top line over 700 crores and bottom line at around 14 crores. Negative to a positive bottom line marked here for your reference. Operating margins have improved. Manufacturing locations are located in Jharkhand, Orissa and West Bengal. Product breakup is shown here. Pig iron is at over 22% and sponge iron is lowest at 8.9%. One can notice that this company comprises almost all the products of the steel sector except for cold rolled products. Annual sales at around 2,500 crores with an equity capital of 110 crores at face value 10 in 2018. Steel billets at 12% capacity utilization levels. The same sales at the increased prices of steel, 90% utilization will shoot up to 8,465 crores. The annual report of financial year 2019 indicates that there is a significant expansion. Final figures arrive at alloy and steel billets capacity over 1 million ton, whereas DRI and pig iron crosses 500,000 ton each in the year 2020. It is to be noted that it is not a small company and it supplies TMT bars for NTPC and Power Grid Corporation of India for all their projects across India. In 2007, HEG sold its steel business to J Balaji Industries, and we see a sharp rise in price in 2007. It has its own reasons to become a penny stock after a decade. Please pause and examine for more detail. I have noticed that there are some political factors as well. And now the position of the company has improved drastically. J Balaji listed as a major player in the global reports on the ductile iron pipe segment, which is currently used for the water supply projects. In 2020, J Balaji listed as the Fortune 500 company in India, positioned at 386. 35 different metrics such as sales, operating cash, PAT, EPS, EBITDA, etc. of this company are plotted for your quick reference to understand its turnaround story. 30 unique metrics as shown were evaluated and the score which the company attains is at 17 after considering the latest Q3 numbers. It indicates it has passed 17 metrics on a positive note. This is significant for a penny stock available at a cheaper price like this. So when we compare J Balaji with Tata Steel and JSW Steel over 2 decades, it is evident that J Balaji has performed well from the year 2006 to 2011. Similarly, when we compare J Balaji and JSW Ispat with Tata Steel, it is evident that both our hot stocks performed well in the last decade. Let's hope for a big bull run ahead in these stocks as they met our KrisDom criteria of penny stocks. Please click the join button and become my YouTube family member for more exclusive posts and multi-bagger ideas. Please do let me know in the comment section which steel sector stock you have currently invested in and which one would you like to add. Thanks for watching. Don't forget to like the video and subscribe to the channel. I will see you again in the next video. Until then, take care of yourself and your investments.